Good. There we go. So we've got a couple more people coming in, including Hannah, who's going to, Hannah Ruckman from our team, who's going to be helping me today. I've had apologies from our Scottish Government colleagues who can't make it today, but I did say to them, the reality is that Scottish Government is leading in many respects in the UK on this particular agenda, and the UK is leading in many respects internationally on how to develop high integrity ecosystem markets. So I think we are in a very privileged position here in the UK when it comes to this particular agenda. Today I'm going to be sharing some of the intelligence that I have gathered over recent months and years as I have specialized in this particular area. A bit of background to me and why me today. I work, yeah, lots of different hats I have in this. So, so if I kind of go in from international to national, in fact, let's go opposite way around. If I work at a subnational level on a place-based approach with landscape enterprise networks. So we'll be having a training, I think, next week with Tom, one of the founding partners of 3Q, who was one of the original architects of the landscape enterprise network approach, which is, as you'll have seen from our report, very well adapted to the RLUP context. I'm a soon-to-be approved board member of the international entity that has just been set up for LENS, which is designed to help scale it. And as you'll hear next week, there are some challenges with how that happens because you need that coordinator in place, and so the idea is that this body will then have the capital to pay for those coordinators and get this up and running and scale this much more broadly. So I think some big opportunities there, and that's the kind of the smallest scale at which I'm working on this. But in particular working in south of Scotland to develop a LENS there, and more recently working with Diageo to develop a proposal for a landscape enterprise network in Speyside. So we can tell you more about that if you're interested. Zooming up then to a Scotland scale, I am working closely with Nature Scot, in particular around peatlands, as part of a team developing a Scottish carbon bank. That carbon bank will integrate a number of different mechanisms that are designed to help de-risk and, here's Hannah, de-risk and scale private investments in peatland restoration. And the idea of the Scottish Carbon Bank is to trial these mechanisms for peatlands, but if that works, to then potentially be able to expand that beyond peatlands. And again, I can tell you more about that if you are interested. Hannah is on the team working on that, so welcome, Hannah. So just introducing why me and giving people a flavour of some of the things that we are both involved in. Hannah, if you want to then add any missing gaps. Because I want this to be as discussion-based as possible. I've got a few slides, but essentially I want to share our knowledge and understanding of what's going on in this rapidly evolving landscape and give you a chance to ask questions and debate and think about how this applies to the RLUP context. So moving from LENS out to peatlands within Scotland and the Scottish Carbon Bank, then up to the scale of Scottish Government's policy. Both Hannah and I are on working groups convened by Scottish Government to develop policy in the natural capital arena, and so working closely with them on that. I'm working in particular on the design of the successor to IRNS, IRNS, which was meant to be Ferns. Whether or not it gets funded is still in the balance, but working to help design that nonetheless. And then I'm brokering relationships with DEFRA's team, who are developing an approach now in collaboration with Scottish Government for UK-wide policy frameworks to govern high integrity ecosystem markets for carbon, but for all of the other ecosystems markets as well. So this autumn, there's going to be a green finance strategy published by DEFRA. Sitting alongside that will be a UK ecosystem market framework, which is in the process of being drafted, with significant input from Scottish Government to make sure this works across the board. And I'll tell you a bit more about that later on. Then at the UK scale, I sit on the executive board for the Peatland Code. I was one of its original architects. Hannah sits on the technical advisory board for the Peatland Code. And through that, we work very closely with the Woodland Carbon Code to keep both of these in alignment. Hannah and I are both on teams developing agricultural soil carbon codes, a salt marsh code, and I'm on a team developing an agroforestry code. And then internationally, I'm working with United Nations Environment Programme in particular on these issues, specifically focused on the peatlands. So I've just come from a meeting of the Global Peatland Assessment, where we're looking at how you can scale carbon markets in particular and other ecosystem markets internationally to fix peatlands. And we have a project in which we are developing peatland carbon markets and other ecosystem markets for Indonesia, Peru, Democratic Republic of Congo, and Republic of Congo. So it gives you a sense of the stuff that I'm involved in from the landscape scale up to the international scale. And I'm going to give Hannah an opportunity to introduce herself and just add anything else that you would like to that.
Hi everyone, great to see you, and my apologies for being slightly late following an overrunning previous meeting. Yes, in addition to all those things Mark's told you about, I'm one of the co-leaders of the Scottish Nature Finance Pioneers Network. I don't know whether any of you are in it already, but if you're not, it's a great network to be part of. About 280 organisations now in it, most of whom are working on or are interested in nature-based solutions projects. I have recently, on SRUC's behalf, become one of the partners of the Alliance for Scotland's Rainforest as well, so very much thinking about landscape restoration there. But lots more, but, you know, boring introductions from academics. Who needs it at 11 a.m. in the morning? So I'll hand over to you.
Brilliant. Okay, so I think that we all know each other, but if you think that others might not know you, I'd like to encourage you to just introduce yourself into the chat. I'm going to introduce our learning outcomes for today and then dive straight into this, but I'd encourage you to ask questions throughout. I will pause multiple times to ask for your questions. And in fact, I might back right up before we go too much further and kind of zoom out to some of the controversies in this particular area. Learning outcomes, we've got 4 of these. So this is about, by the end of this session, understanding the purpose and types of ecosystem markets that exist and are under development in the UK. You should have an appreciation of what is driving investment in these different types of markets, and you'll have an opportunity to consider the role of place-based approaches generally and RLUPs in relation to these markets. But we'll also think about some of the critiques and challenges, how these are being addressed, in particular to develop high-integrity ecosystem markets in the UK. And in fact, I'm going to zoom right out. I am a volunteer board member for my local development trust here in Huntly, where I'm broadcasting from. And we are tentatively thinking about working with a company called the Habitat People to transform some heavily grazed sheep pasture into some biodiverse meadows with carbon sequestration and using carbon markets to pay for that. And so tomorrow night, I'm going into a debate on whether or not we should do this. And the objection is not anything technical. It is a fundamental objection to the use of carbon markets and offsetting as a form of greenwashing. And I think it's probably worth just pausing for a moment and having that debate, because I think that in any kind of public context, such as you are in the same way that as I go to my local community, you will hear these critiques. And let's have a think about these critiques to start with, and lay that to rest, hopefully, and see where we go with this. Thank you, Hannah. Does anyone, I think, more authentic than me representing these views, the views of others? Now, I have a good suspicion that there are at least some of us who actually hold these doubts ourselves. These are not resolved issues for us. We're really not sure. And I wonder, can some of you voice these concerns, these doubts, as you hold them? Because I think that will be much more convincing, much more powerful, much more effective. So over to you. What are the critiques? Why should we avoid touching this stuff at all? Because it's just a whole load of greenwash. Yeah, over to you, Karen.
I think, especially if you're not totally familiar with the different markets and how it all works, I think the general perception is that it's a bit of a Wild West, unregulated, and therefore integrity is lacking, and therefore people can greenwash very easily. And I think there's a general perception at the moment that the government, although I know the Scottish government is doing far more than most, is still on the back foot in terms of regulation, and therefore I think there's a lack of confidence. And also it's so complicated, you know, there's so many different ways and forms that people are trying to develop new markets, and for the average person to be able to understand all that and to sift through to what is greenwashing and what isn't, that is really difficult. So then I think people just automatically go, well, I think it's all a bit dodgy and therefore we should stay clear of it for now. And I think they see also the unintended consequences and a practical side, say with the forestry issue, which is, I think, the biggest unintended and visible consequence of the carbon market, certainly. Mm-hmm. And that's put a lot of people off because, you know, they see forestry, certainly in the south of Scotland, you know, unsympathetic to landscape, to communities, to biodiversity. And again, I think that's seen as a lack and a fault of failure of regulation, you know, and a perception that the government sees things like forestry as a simple solution to climate change, when it's not as simple as that. But the policies in place at the moment, you know, lead to consequences that ordinary people can actually see, and therefore that tarnishes the whole concept and the whole market.
Okay, so I'm going to take some notes of what you're saying, so we can just record all of these critiques. But we've got this issue of weak regulation leading to the potential for greenwash. The National Farmers Union are making it very clear they do not recommend their members to engage with these markets. The land advising community in general arguing that there is a first mover disadvantage in these markets, and there are lots of reasons for that disadvantage which we can discuss. So the play safe advice is don't engage yet. And if you needed evidence for that, then the whole issue of forestry and this combination. So I'm going to put a link into the chat here because I think that it is worth pointing out that this is it is a simplification to say that natural capital markets are driving the forestry gold rush. We have just published an analysis of this, a detailed analysis of this. Hannah and I, both co-authors on this. I chaired the round table. I think maybe some of you guys were even at that. 16 recommendations, some of which are being taken forward at the moment through the Scottish Government's Land Reform Bill consultation. But the evidence suggests that there are three drivers, and yes, natural capital markets are part of this, but they are sitting on top of timber prices and a background increase in land prices. But some scary stats in here. Actual forests have sold for, in 2021, 50% over their asking price on average. And plantable hill land and extensive livestock grazing country selling at 58% and 60% higher in 2021 than in 2022, and those are Scottish statistics specifically. This is a uniquely, well, it's not unique, it's happening across the UK, but it is exaggerated in Scotland. So my internet is going slow. I'll give you the link to that report in a moment, and hand over to Mike.
Yeah, hi Mark. My name's Mike Cottam. I work for Cairngorm National Park Authority. We've been doing some extensive work with Palladium International to explore the possibility of bringing private finance into the park to address mainly our challenge for all the degraded peatland that we have in the park. And we commissioned Palladium to do a number of things, one of which was to develop as a model that would work for private finance using an example site within the park. And the other one was to look at wider natural capital opportunities within a Cairngorm's context. We actually found that Palladium could not give us a private model for investment in our peatlands that would give a return, including a community return for everyone involved. Until the carbon unit price rose to about £80 a unit, and then the private model became viable at that stage. But since, as I understand it, it's only at £25 or £30 at the moment, we're an awful long way from that. So we had to ask Palladium to take a step back, and they came up with an idea that the Scottish Government strategy of public funding up front for carbon restoration was holding back private investment, and would Scottish Government be prepared to relook at strategy and pay for outcomes further down the piece. And I understand this is something that's familiar with renewable energy projects, wind farms and so on. And then the private finance could actually be invested initially into peatland restoration. And we're going to get a group together in September just to talk through all that. So basically we failed in the sense that we couldn't get a private finance model that would be viable within the park given existing market situation. And the natural capital opportunities, they were telling us, are not that well developed in Scotland. We pointed them in the direction of looking at water-based solutions, flood alleviation, quality of water, particularly with the whiskey industry in Speyside and Deeside. And they didn't come up with anything that's particularly startling, so that we could perhaps stack some of these opportunities and make them viable. So yeah, we're exploring this to a large extent. We're using some of National Lottery Fund Heritage Horizons money to explore green investment in our particular area. And we're still going to take this thing forward through a development phase that will finish in March 2023, I'm not yet convinced whether we will take it forward into a delivery phase that the National Lottery will fund going forward. So our experience with private finance has not been too encouraging at the moment, but we'll keep at it and we'll wait and see how this develops. And as I say, we're trying to get some involved people from various agencies and organizations together in September, middle of September, just to actually talk through this idea of private finance and explore it some further. So that's our experience up to press.
Okay, great. So first of all, I live on the edge of the Cairngorms, and if I can help, I would love to help. Time is the problem, but you never know. Secondly, there are two reports you may be interested in. One I put in the chat, which was commissioned by the Great North Bog, who are also working with Palladium. And I've been emailing them repeatedly to say, are you going to publish this? And had no response now. It's getting to a kind of a weekly reminder situation on this. So it's not published, so maybe don't share it too widely, but I can't see any reason why they would not want to publish this. So I'm hoping it's okay that I've shared that with you. And it was a similar goal.
That's okay. Can I?
Yep. Sorry, Mike.
Sorry, no, I was just going to round off, just in support of what was said earlier, just to round off that also in our sort of landowner community within the national park, their advisors, I'm thinking the likes of Savills and Bidwells and so on, like the NFU, are advising their landowner clients to actually basically sit tight on this and not getting engaged in these markets at the moment, that the risk is too great. They don't know what Scottish government is going to expect landowners, farmers to deliver by 2045 to be carbon neutral. So basically register your projects for the units, put the units in your back pocket and just sit on them until the market becomes clearer, because it's too high risk at the moment. That's the advice that's actually going around our landowning community.
Yeah. Okay, I'm just writing that down. So this is another issue, just to summarize this. The danger that you sell your carbon as an offset now, and at a later date, either the government or the bigger concern is suppliers, the people that you are supplying, require carbon as part of an inset. And while the majority of companies moving into this insetting space are paying extra money for those greenhouse gas emission reductions or carbon sequestration, there's no guarantee that that will necessarily be the approach of everyone, and some may make purchasing conditional on you delivering on their greenhouse gas emission reduction targets. And if you can't do that, then that might put you at a competitive disadvantage over others trying to supply that same buyer. So I would concur with that cautious approach. The other report I was going to mention is not yet published. This is the report being led by Finance Earth to Scottish Government and Nature Scot on the design of a Scottish carbon bank. Please don't quote me on this because this figure may not quite be right and may change, but ballpark, the figure that Finance Earth came up with to do peatland restoration without any government subsidy was around £60. So again, far above what we are currently getting. And just so you're aware, what we're currently getting is for pending issuance units in the peatland code, on average between £15 and £20, but increasingly now moving up into the 20s and up to £30 per tonne. We expect once those are verified and turned into peatland carbon units that they will be worth significantly more than that, but there's no guarantee they'll be worth that much. And so the recommendation that we will be making is that Scottish Government needs to continue to subsidise this and support this. So there is still a role for people in action in this space. But this is about transitioning that funding from a grant-based model into a hybrid or blended finance model that leverages private investments by de-risking those investments. And a key part of this is the idea of a floor price for carbon in this particular market. Now, in the peatland codes, we have recognized now for over a year, we have a big problem. The problem is on the supply side. So we have a demand that has far outstripped the amount of peatland carbon that we can supply. If you talk to others in this space, whether that's the Great North Bog, you guys in the Cairngorms, Palladium, others, we cannot source enough projects. And there are lots of reasons for this, but increasingly, the number one reason for this is that landowners are, I would argue, quite sensibly holding on to that carbon, given the fact that this is an appreciating asset. And they are warned off, I would argue appropriately, forward selling that carbon as pending issuance units at a lower price than they might eventually be able to get that. Also potentially jeopardizing the long-term success of those projects because you don't have the long-term income coming from that at a rate sufficient to provide for the management and maintenance costs of that project over your 30 years or more. So our view as the Peatland Code, having looked at lots of different options, has been that a carbon floor price is the best way to provide not only confidence to investors, which is not so much a problem, but in particular confidence to landowners that it is worth engaging with this market, and that if they do so, that they can get a guaranteed minimum price for that carbon, and that they can hold on to those rights. And there are lots of different contractual models that you can build in where you do want to get some of that and some of those investors crowded in earlier, sooner rather than later. But we can talk more about this because it gets a bit detailed and technical if you want later on. But the message I'm trying to communicate here is that even if only on a pilot basis, there is this new model coming down the line. This is a model that I believe is going to be highly attractive to the landowning community as well as the investment community, that I believe will be able to unlock our supply problem and kickstart peatland carbon markets at a scale we've not yet seen before in Scotland. And the DEFRA is also looking at this and has been considering this for the next iteration of its Nature for Climate Fund. So this is, but we're pioneering it in Scotland. So one quick question back to Mike. I wonder if I might put you in touch with the lead author from Finance Earth, and with appropriate permissions, which you may or may not be able to get. I think swapping notes between your Palladium project and the Finance Earth project could be very useful. So could you give me your email address so that I can put you in touch, Mike? I'll take that as a maybe, unless you aren't aware that you're on mute, Mike. And maybe you're away from your computer. I'll just write that into the chat. Okay, Andy.
Oh, thanks, Mark. Yeah, it was just a quick point about the greenwashing aspect, that perhaps part of the perception of greenwashing is linked to offsetting and maybe a misunderstanding or a misconception of what it actually is to achieve. Because whilst we're in transition, offsetting will play a role but perhaps it's seen as something which is being exploited. So perhaps a better understanding or more information or raising awareness of offsetting and what it can achieve needs to be brought forward, because I think that's only my opinion, but I think that's probably part of the problem, that people see offsetting. There's a perception of all offsetting is bad, whereas some industries, some businesses are going to rely on that in the transition phase until we are a true low carbon economy nationally and internationally. So yeah.
Great. So
actually, just a quick point, you linked to your report, it didn't work, the Safari site, so don't know if you can add in another link there, Mark. Yeah.
I'll try this. So it's definitely working on my screen. I'll just copy and paste directly again.
Yeah,
Right,
I could open it.
Okay, great.
Can,
so an additional critique, which is a valid critique.
I've got page not found.
And in fact, this is the critique that came to me from my development trust. Offsetting is just a loophole to allow polluters to continue with business as usual. And so I would argue that without the levels of integrity that we ideally need, that yes, this is possible and it happens. And even with some of the things that you would expect, it is still possible, it is still happening. All you have to do is look at Shell and forestry and the Woodland Carbon Code. Look no further, it's a highly problematic project. So yes, this is a problem, if you are a company that is in scope for reporting on your emissions, scope 1, 2, and 3, and you're doing so through the UK Environmental Reporting Guidelines, then there are very clear guidelines and checks and balances that ensure that you have to have done everything to reduce emissions at source before you then offset your residual emissions. If you then look at international schemes such as the Science-Based Science-Based Targets Initiative, SBTI, again, you have to have demonstrated that you have reduced your emissions at source, that you're only offsetting residual emissions. And if my memory serves me right, that offsetting is still capped at 5% of your total. So there's a limit to how much you can do, even if you've got more residual emissions than that. So that is as it should be. Both the Peatland Code and the Woodland Carbon Codes also state that you have to have reduced emissions at source. However, there is a problem with our two existing UK domestic voluntary carbon markets for peatlands and woodlands, which is that we do not have, I would argue, sufficiently robust processes for doing those buyer checks. And the fact that Shell were able to use the Woodland Carbon Code to make the scale of investment that they did in Scottish forestry is evidence of that. An environmental NGO did a freedom of information request to Scottish forestry, I think it was, and found that there was a high-level debate about whether or not to accept that investment, and the decision ultimately was to accept that. So to give Scottish forestry their due, there were dissenting voices within the ranks, despite the fact that ultimately they took the money. The Peatland Code is owned by the International Union for the Conservation of Nature, which is an environmental conservation NGO. And as such, we have taken the decision to decline investment from obvious polluters, and we would not accept an investment from Shell. However, we do not have systematic checks that enable us to go deep enough into the workings, the investment portfolios, etc., of the companies who invest to fully check that. There is, however, a competing standard called Wilder Carbon that is now competing with both the Woodland Carbon Code and the Peatland Code. And part of its unique selling point is that it does do those buyer checks. And so this is an interesting example of competition for codes driving up standards. And so as an executive board, we are now looking at whether there is something we can do in this space. The problem is that it is extremely expensive to do those checks to a level that you are fully satisfied and confident that the people that you are allowing to invest are not hiding things from you. And that's the challenge. And I don't know how what the processes are that Wilder Carbon use. All I understand is that there is a due diligence process that the wildlife trusts already use, and they are using that. Yeah, so who knows whether or not that is robust, but it's certainly better than what we're currently doing. I'll just briefly talk to you about Wilder Carbon while we're on this, because I think it's an interesting one. The other unique selling point that they are arguing is that they have longer contract periods, so they offer better permanence. So for peatlands, you have a minimum 100-year contract length or a 50-year contract length plus a conservation easement or covenant in England and Wales. Our assessment of this within the peatland code is that this is going to restrict their supply far greater than our already large supply side problem, effectively to conservation NGOs who own land. So we do not see them as a major competitor on that basis. Your average landowner, as you'll see from our report for the Great North Bog, is already struggling with 30 years and are not interested in conservation covenants and easements attached to their title deeds. But they are also, final unique selling point is they also measure the biodiversity using the DEFRA 4.0 metric and give you that data alongside your carbon. For all of those benefits, they are charging £60 per tonne, and they claim that they have a number of corporates who are willing to pay that. My suspicion is that that is a small number of corporates, but who knows? Great. So I'm going to share with you the critique that we've got so far, and let's start to address some of these critiques. I'm going to ask Hannah for some help with this. I'll kick the ball off and maybe hand over to Hannah. Sorry, I'm just dumping you right in this here, Hannah, but I will also hand over to everyone else in terms of, yeah, what do you say to people who come up with objections like these? And so the last point that I'm going to make, well, in fact, the first point that I make addresses this last point, which is that I think that we have to have the humility to say, you know what, you're right. All of these are problems. These are new markets. And in any new market, just look at controversial technologies, for example. There will be critics who say there simply should not be a market for this. We have the option to throw the baby out with the bathwater. The alternative is to say there is an urgent and important enough need for these markets that we have to consider these, and therefore the approach is that we go slowly and we build the regulation and all of the other checks and balances we need around these markets so that we can use them safely. And far better to harness those markets and to do so in a safe way than to try and address the scale of the challenge using public investments alone. Now I'm going to build on this argument with my following slides, and I'll come back to this and we can look at some of the other counter arguments. And actually, before I do this, I'm just going to check our time. How long do we have for this? Oh, we only have 1 hour. I thought we had an hour and a half. Oh my goodness. All right, so very quickly, nightmare. Natural capital and ecosystem services, we have stocks of capital and flows of services that benefit society. We have, through our activity, created climate change and biodiversity loss. These are what's known as externalities. We didn't mean them to happen, but they happened, and the public pays for these, future generation pays for these. So we need to internalize these. The polluter needs to pay for them, but apportioning responsibility is a bit difficult. Very often there are multiple people involved, and why should I pay when there was a bunch of other people also responsible who will also benefit from me paying to fix this? So how do you solve this? Well, maybe it should just be the government, in which case we're going to wait a long time. And the evidence suggests very clearly, and I'm referring in particular to a recent paper by Klaus Glenk and colleagues from SRUC in relation to peatlands, but this applies across the board. The sooner we fix it, the lower the bill. And that means we need help because public sources are insufficient. The gap between our committed and planned spending to tackle the twin climate and biodiversity crises in Scotland and what is required to actually do that is between 15 and 27 billion as estimated by the Green Finance Institute. And for that reason, we have investors who are interested, whether this is about reducing risks to their operations and their supply chains, whether it's about offsetting or insetting or investment, and we have the potential to capitalize on that. The question is how we can do so safely, but I would argue let's not throw the baby out with the bathwater. So having realized painfully that, that I got the timings wrong and we only have 1 hour, I'm thinking that we should maybe do a quick walk through some of the other basic concepts here. And what I'm going to do is then ask you to write your questions in the chat, and we'll then come to those and make sure we answer all your questions. Is that okay? Great. So I think what's useful, just it's a bit of a 101, is to try and get your head around the different types of market that exist, because this stuff is confusing. So I regularly get asked to brief new civil servants when they come into their brief in Scotland and England. So you've worked on pollination all of your career in DEFRA so far. Now you're working on natural capital and ecosystem markets. What do you need to know? And so I regularly have these conversations with people, and I start by giving them this typology. So first of all, we've got carbon markets, and then we've got other ecosystem markets. So these other benefits that nature can supply to society. Let's focus on the carbon markets to start with. And instantly we've got emissions trading. So this is in the UK, we have a UK emissions trading scheme, and this is energy intensive industries that have to be part of this. For those industries, we have a cap for the amount of emissions they are allowed to reduce. Over subsequent years, that cap reduces in line with our Paris Agreement commitments to make sure that we meet those commitments. Each of the companies who are involved in that are given an allowance, which means that they are allowed to emit up to that allowance. If they want to emit over that allowance, they have to buy credits from other people in the scheme. And if you have managed to reduce your emissions such that you don't use all of your allowance, then you can sell that allowance, making it more cost effective for you to continue reducing your emissions. So that's the cap and trade principle behind emissions trading. But carbon offsetting is not part of that. So I'm going to move swiftly on from that. And so we now have compliance versus voluntary carbon markets. The compliance markets are the markets that countries can invest in. And so this is the Clean Development Mechanism, I've forgotten the most recent name for this now, so I don't pay too much attention to this. It's not relevant directly to me. But the point here is that this is again not relevant to us, given the agreements that Britain has made in terms of its use of those international compliance markets, where we are not able to invest in carbon from other countries to meet our national commitments under the Paris Agreement. So that then brings us to voluntary carbon markets, which we do have in the UK. The government's approach to this following Glasgow is that we are, where possible, keeping hold of these emission reductions and carbon sequestration ourselves. And we are counting these towards our emission targets, but in DEFRA in particular, this is an open debate. Should we be allowing overseas investment in UK carbon markets? Some people think we should, it's good for the economy. Other people think we shouldn't. We'll never meet our Paris Agreement targets if we have to keep taking these off and giving them to other countries because of these international voluntary carbon market investors. So there's nothing on the cards in terms of a policy decision, but that could happen in future. And then we've got these international international voluntary carbon markets, so things like Gold Standard and Vera. They have methodologies that can operate in any country, including the UK. And so, for example, with salt marsh at the moment, we are looking at applying the Vera salt marsh methodology in the UK and operating that in a way that has UK governance and data driving that. Vera hasn't been used to date in the UK, although there are people looking at the agricultural, one of their agricultural methodologies. We didn't use it for peatland either. And the problem is it is vastly expensive, crazily expensive. And we think it can work given the scale of managed realignment projects in the UK. But we are still developing a UK salt marsh code on a similar footing to the peatland code and the woodland carbon code. Because we still need something which is going to be more cost effective. And that has been what has driven the development of domestic voluntary carbon markets in the UK, because the international markets are too expensive to use. That's partly because of the assurance mechanisms that they use, which are very risk averse, but it's also because these are for-profit companies that are running these. So zooming in on the domestic voluntary carbon markets in the UK, we have two, which we've already talked about, and we have markets developing. The seagrass and kelp markets are currently just piloting on a very small scale. I don't know of any ambition to turn them into UK-wide blue carbon markets. The salt marsh code is the only one that I know in that kind of UK-wide category at the moment, although I could be wrong. I'm not in touch with those teams. There's a hedgerow code being developed, agricultural soil and agroforestry, although agroforestry this is a project in collaboration with the Woodland Carbon Code, and we expect it to be integrated with the Woodland Carbon Code. So that's the carbon markets. So you've got this idea of carbon markets, you've got emissions trading versus other types of carbon markets. Those other carbon markets can be compliant or voluntary, and then we've got international and national voluntary markets. Then within the ecosystem markets, more generally, we have biodiversity markets. So again, there's a compliance market run by the English government called Biodiversity Net Gain. There is a consultation coming out in Scotland on this. It will be called something different, but it's likely to operate in a similar way. So developers now can develop using biodiversity or habitats, biodiversity offsets or habitat banking is what it's called in England. So something similar could be done in Scotland, and that's a regulatory mechanism that can drive those kinds of markets. But there are voluntary markets. So Hannah can tell you more about what's going on in that space with Scotland's Rainforest Alliance. And I work as an unpaid advisor to the Habitat people that are doing work around meadow creation and paying for that with carbon credits. There are water quality schemes, mainly led by water companies, and flood risk alleviation schemes, mainly focused on natural flood management, tree planting in floodplains and the like. And all of these schemes have challenges when it comes to stacking versus bundling. Do I have a premium carbon product, which is what the peatland code is essentially, invest in UK peatland carbon, and you get all of the co-benefits of the incredible biodiversity that you protect and get back. There are water quality benefits in terms of reduced dissolved organic carbon, maybe in some cases some reduced flood risk as well. And that's how we can justify the price tag and what is driving some of the investors who are interested in that. And the alternative, though, is that we separate each of those services out and we say, well, we'll sell the carbon to you, we'll sell the flood risk to you, the water quality to you, and the biodiversity to someone else. The problem, however, with that is that if you are going to restore that peat bog for the carbon benefits, and you then subsequently get all of those other benefits in with the package, because they are effectively just co-benefits of restoring a peat bog, then none of those co-benefits are actually additional. They would have happened anyway. So you are selling hot air to the people who think they are paying to get biodiversity. That biodiversity would have happened anyway. And so the key thing here is stacking is difficult. And if you want to do that, you have to check that you meet the additionality criteria of each ecosystem market. So that is my whiz through all of the key things that you need to know about this. We can come to integrated approaches and lens, but I'm going to maybe leave that for our next session. Hannah, over to you.
I just wanted to clarify on the stacking there, Mark. I think that's absolutely right for peatland, but we're looking at biodiversity, voluntary biodiversity kind of net gain stuff for the Alliance for Scotland's Rainforest, and there we think that we're going to be able to sort of quite easily separate out biodiversity net gain. So you're right to advise everyone to kind of look at the instructions in the code, but yeah, we're hopeful that depending on the landscape, that rainforest being very different to peatland, that we won't have to stack that.
Yeah, I think it is absolutely possible. So we're discussing some funding for some pilot projects linked to version 2 of the peatland code, which will allow the raising of water tables on agricultural peatlands used for arable or horticulture, and paludiculture, wetland agriculture, in addition to fenlands in version 2. And paludiculture is an interesting example where you could stack 2 types of carbon payment. So there is a European biochar carbon market. So you could input biochar into your paludiculture soil as part of your planting of the crop, and claim carbon credits for the biochar, in addition to claiming carbon credits from the peatland code through the reduced emissions that are coming from those sites compared to arable or horticulture. And at the same time, if you can demonstrate that those 2 alone are insufficient to make that profitable compared to its current use for arable or in particular horticulture, then you would then be able to stack the biodiversity benefits on top of that in order to get people over that bar to make paludiculture crops with 2 types of carbon credits and biodiversity actually now something that induces that land use change, and something that would not have happened without all of those being stacked together. So questions in the chat, thank you everyone. We have links rather than questions. And Lizzie's saying she can stay for an extra half hour. I wonder if I can. Yeah, I have some flexibility as well, actually. So I'd be happy to stay for a slightly extended Q&A session if that prevents us rushing things. I'm not sure who else can, so apologies for my poor time management. But I think, we had a good discussion, and I think it's nice to start with those issues, because that is instantly what you're going to get from your communities. And having voiced that and heard some of the answers to that, I think is already useful. And we've already got into a lot of the technical detail. So I'm feeling quite happy with where we've got to at this point with 4 minutes to go. So maybe if I invite Hannah to just wrap up with any, because I was going to put you on the spot. I wonder, any reactions to you or other things you'd like to build on what I've said by way of conclusion, and then we'll kind of officially end the session. But then we'll unofficially reopen the session for anyone who would like to stay for an extended Q&A, because I think we have gone through all of the basics at this point.
So I think my challenge, Mark, is the elephant in the room that I always feel is there when we're discussing nature markets. And the elephant in the room is, should nature even be in a market? And people have experience of this because look what happened with the oil sector. And, you know, that's a sort of live topic for people at the moment. So I'm just wondering what your reflections are when you're put on the spot to answer that question. This
is the George Monbiot effect. Yeah, so me and George don't entirely see eye to eye on this particular issue, and in fact we've both blogged against each other in The Guardian on this very issue, where George claims that what we are doing is we are privatizing nature and selling it to the highest bidder. The reality, however, I would suggest is very different. I'm looking out my window at a field of barley. That barley is highly likely to be sold to Diageo as malting barley. Does that mean that Diageo now owns the land in front of my window and controls what happens on it? Of course, no. That barley is an output. It is a product that is being sold on an annual basis, yes, to the highest bidder. But that farmer still owns, in this case, his land. And he is it's entirely up to him who he chooses to sell that to and whether he decides to sell it at all. And it is exactly the same with carbon. The carbon is simply another commodity that, depending on how he chooses, if he chooses to manage his land, he can, if he wishes, then sell to whoever he would like to sell that to. So that's the analogy I use. Does that work? What I think is problematic about this is that this is politicizing something unnecessarily, and it positions people like me as raving capitalists who are kind of right-wing free marketeers. If you could see my personal politics, you would know that nothing could be further from the truth. But I regularly get hate mail from people who want to take me down because they simply assume my politics based on what I research. And I think that for me the key thing is to try and depoliticize this and to try and get behind those arguments. And again, a fundamental argument behind this is capitalism caused the environmental problems that we see in the world today. Therefore, by definition, capitalism cannot and should not be part of the solution. And if that is the case, then the logical conclusion, A, is that the public sector must bear the full costs of this. And we have then a pragmatic problem with that, and B, that we have to change the economic system. Whilst I have a lot of sympathy with that, and I think that we can and should be trying to transition our economy, the idea that we can replace capitalism lock, stock and barrel to the extent that some of these people would argue is, I would suggest, just not achievable within the timescale that we need to solve this problem. And so for me, I would argue, whether or not you agree with these philosophical viewpoints, there is a purist philosophical viewpoint versus a pragmatist viewpoint. And then there is a philosophy behind that pragmatism that says climate change is an existential threat, and therefore we have to work with what we've got. So it is 12 o'clock. I'm going to formally close this just now. If anyone needs to get on, thank you for your time. I'm going to keep the recording going because it's just getting interesting as far as I'm concerned. Anyone who wants to stay, please do so. Andy, over to you.
Thanks, Mark. I'm just thinking in the context of our pilots that we, our primary outcome or output will be the regional land use framework by the end of 2023, which, if things go according to plan, we'll have agreed with our stakeholders the priorities for land use to address the twin emergencies. So it'll be, how we protect and enhance our natural capital assets and have prioritised.
Oh.
Oh, can you still hear me?
You're back.
Yeah, prioritise the, if you like, the ecosystem services that stakeholders want. Want provision in the region. So, what's the? I appreciate I'm looking for some crystal ball gazing, but as has been discussed this morning, there's the carbon markets are the most mature, but they're still regulated and a bit chaotic. And then these other markets for things like hedgerows, salt marshes, etc., and then biodiversity, NFM, that kind of stuff are in the pipeline or quite a way down the pipeline. What we will need to ensure delivery is a balance of these markets, so that they are a bit more joined up, because we, as Karen pointed out, we're seeing distortions in terms of changing land use because of carbon markets, in part for things like woodland expansion, forestry expansion. So we may produce our frameworks at the end of 23. What's the likelihood of there being relevant markets to ensure delivery? What was it? Are we talking the next decade or 5 years or?
Yeah, I think this is good timing. So my assessment in terms of the maturity of these markets and where I would look first would be that carbon markets are the most mature, and that's where I would look first. Regional ecosystem markets via the lens approach would be the second most mature. We have £5 million worth of private investment in lens landscapes across Europe, and we're in the process of developing the first peatland lens in Indonesia at the moment as part of one of the projects I was telling you about earlier. So lens works, it is operational, it is well adapted to the RLUP context and can integrate carbon markets. And that's why I was keen to do that training directly with Tom, and it's coming up next. So whether or not you use the lens approach specifically, or whether it's your own adapted version of that with your RLUP team as the coordinator of this, I think that the tools that Lens use will give you everything you need to be able to do the mapping of what you've got in terms of natural capital and ecosystem services coming out of that landscape, and what regional investors might be interested in. And when you then layer onto that the carbon markets that we have for woodlands and peatlands, with the other markets that are coming online with non-regional investors, so outside of your region, primarily in the UK, then you have a fairly tried and tested model for building a credible natural capital funding basis for your framework. So two places of look would be carbon markets and Lens. The second place I would look, though, is this Scottish Carbon Bank, and this idea of a floor price, and whilst you can see that for peatlands, and I'm aware that not all of you have peatlands, this is something that will be within the timescale of you developing this framework, and if it goes well, this is something that could then be extended to other areas, and most likely the next one would be woodland, although I have no intelligence as to say that. It's just the most obvious next step. And crucially, I think your job as RLUPs, I would suggest, is not to necessarily meet the objectives of investors like Palladium, but to ensure that you get the land use change. And if to achieve that land use change, you need to leave all of those carbon rights with your landowners, then that's the approach that you need to take. Or you need to take a hybrid approach where you have some kind of benefit sharing agreement between an investor and those landowners in terms of who gets what in terms of those carbon rights, and how profits are shared if those accrue in value over time, and they're being shared between the two. So we can talk about benefit sharing contracts and the kind of things that are happening in a moment, if you like. But I'd like to talk about this carbon floor price guarantee mechanism. Because what this does is that it enables your landowners to hold on to those carbon rights, but it gets over the challenge of the fact that there is going to be substantial upfront capital investment costs. And so you don't have to forward sell your carbon as a pending issuance unit, giving up those rights at a low price. You keep hold of all of those units. I cannot remember all of the details of the model as it has been proposed, and it is still under development. First draft goes to Nature Scott next week, I believe, so I'm not going to give you the full details. I'm going to give you the basic principles, but that's probably the easiest to understand anyway. So don't hold me to exactly how this is going to work, but I'll give you the basic principles. So hold on with this because it's a little bit complicated, but the first principle is that there is an application window that opens up for people to bid in to a fund to do peatland restoration. Now this is a reverse auction, so I'll give you just the basics of a reverse auction. There are some very nice and clever proposals being made to help this operate in a fair way. But the basics of a reverse auction is everyone says I am willing to restore my peatland if you can pay me this much. And this much is going to include all of the upfront capital works. It's going to include the management, all of the costs of putting this through the peatland code. It's going to include the maintenance cost, and it's going to include profit for me. But that's how much you'd have to pay me for me to say this is worth my while in terms of my business, my farm business typically, or estate business. Everyone puts those in, and then the government has a fund, say £50 million, and that fund is allocated to projects going for the lowest cost first, until you fill up lower cost up to higher cost until you reach your £50 million is now allocated. Anything that is above that is now not funded, but there are various mechanisms built into this to prevent this being a race to the bottom, and everyone ending up undercutting each other, and at the end of the day, everyone gets the same price per ton of carbon, and that price is actually the highest bid that was viable within the scheme. So the ultimate idea of this is that there is a single carbon price that is set, and that is set through a reverse auction. in a way that prevents a race to the bottom, so that that price is ultimately a highly attractive price for the majority of people who are in that scheme, and the majority of people get more than they were anticipating. So good for landowners, incentivizing landowners to say, yeah, the time is now right to do this. And my expectation is that the land advising community, the Savills, Bidwells of this world, will start giving that green light once they see how this stacks up for their clients and how much of a cut they can build into those bids that they write for their clients. So we've got our floor price that has been set. There's a second component to this, which is an investment fund. And this investment fund, it doesn't quite work like a loan, but let's just call it a loan. It's kind of easy to get your head around. And so what's happening now is there's this large sum of money that is actually from private investors that you can use as part of your bid to pay for those capital works and to build into your finance. You will also be told how much public investment you can build in, and there will be an element of this set based on what we think the market can sustain. In terms of, yeah, like I said, without government funding, maybe 60, maybe Palladium says £80 per tonne, it's not going to work. So there will be a government subsidy in there. You can build that into your project. There will also then be this finance mechanism. You can build that into your project. You will know the interest rate. You'll have to pay that back over your 30-year term or longer, depending on how long your project is. And so now, as part of this, each of these bids, most of the bids will, I think, include money committed from that private investment fund. Those private investors are happy because that fund has been set with terms that are attractive enough to those investors, who now know they are going to get a guaranteed return on their investment over that 30-year period. And in terms of the landowners, they know, I'll come on to exactly why, that they will be able to guarantee that they will make those payments, and there is no risk of them defaulting on those loans, which is also good for the investors. So we've got happy investors, and we've got happy landowners now who have built this into their bids to the reverse auction. So the final part of this now is the floor price and how this works. So we do our projects, we implement them on the ground, restore our peat bogs, and we do the whole validation thing through the peatland code, check that everything's been done as it should have been, etc., etc. Do our kind of baseline type stuff, and then year 5 is our first verification point. Then we have our 5 yearly, etc., verification points running through. We get our independent verification bodies in to check everything is as it should be, and assuming things are on track, then we release verified peatland carbon units. These now have a market price. And at that point, your landowner has a choice for the units that have been allocated in that first verification unit, verification period. They can sell them at the market price, assuming that that market price is higher than the floor price that has been agreed with the government. So there are 3 choices actually. So first is I sell to the market at a price which is higher than the floor price. I'm even happier than I was to start with than that, because that's even better than the floor price. Option number 2 is I see how this market is going. I want to hold on to these. I think 5 years from now it's going to be worth even more. So I hold on to those units and I do not sell them until a later date. The third option is actually this market has crashed for some reason, and I can no longer sell these at a price that would recover my costs. However, I now invoke that floor price guarantee, which means I now sell to government at the agreed floor price, which I already knew I was happy to do, that will cover that finance agreement and my profits and everything else. And now government takes that hit and maybe holds on to them, hopes that they'll be worth more in the future or whatever. That's government's problem. It's not a problem for your landowners. And if you've got investors waiting in the wings, then they simply have to wait, or they work with your landowners to create those bids, and there's some kind of agreement to share those units with those buyers, which we can talk a bit more about if you want. Yeah, thoughts, reflections on this as a mechanism. Hopefully you can see why, as a peatland codes, we have been arguing for this, and why we think this is what will now kickstart the supply of peatland projects in Scotland.
Seems like a good idea to me. You're sort of basically government's underwriting the market, isn't it? But not tying owners in, so that if they can achieve a better price later on, they can do that.
Mm.
Is the carbon units, are they drip feed? So are they every year, every 5 years? Is that what you're saying? Every 5 years it's verified, and
yeah, every
and
5
certain
years,
amount of units are released, is that?
Yeah, new units released every 5 years, assuming everything's on track based on the verification process.
Yeah, which is also a more attractive, presumably a more attractive agreement to landowners rather than the upfront payments, because then you're always keeping track of the market, aren't you? You know, as the market goes up, although you don't get a big lot up front, you certainly do you have the opportunity to keep up with the price as it goes up potentially.
Exactly. Although the landowners have to commit in the peatland code to a minimum of a 30-year contract, and that is a problem for some people. So there isn't anything published on this yet, other than a paper that I co-authored with Hannah and colleagues from Finance Earth, which I'm putting into the chat just now, which describes the idea of a peatland guarantee in fairly basic terms. But if you want to share that with landowners as a way of explaining this and saying this is actually real, given that there's nothing else published, that's something that you might find useful.
Couple of questions in the chat, Mark, worth addressing.
Great. Okay. So Fiona, can I just do this one first? Contractor capacity. We are aware that this is still a problem. The first feedback that we as a programme gave to Scottish Government and English Government and Wales and Northern Ireland was based on feedback from the contracting community. Contractors were not able to justify investing in equipment and an expansion because of the annual spending cycles of government, which gave them no certainty that if they expanded to meet demand, that demand might suddenly disappear in a completely unpredictable way. So that is one of clearly many factors that have determined Scottish Government's 10-year, £250 million commitment to peatland restoration. So in Scotland, we have resolved that issue. There is, however, and there will be, if I'm right in my assertion that this will kickstart supply, there will be a growing problem. My own view on this is that by engaging with the landowning and management community, farmers in particular, that this is going to be something that will be increasingly lucrative, and where you have a supply and demand problem, prices go up. A digger driver, or people with diggers with the correct kind of tracks, with the skills to do this, will be in demand, will be able to name their price, which will be built into these bids. And where you have well enough paid work, there are going to be farmers who will be adapting their diggers and learning how to do this. So my personal belief is it will take time, there'll be a lag, and there'll be a short-term problem of supply of contractors, but I believe that the market will do a kind of a self-correct on that if the price is right. I could of course be completely wrong there, but that's my own view. So question, yeah, no worries, Fiona, from NW2045. Who is this? What is your name? Sorry.
That's Rachel Skeen. She has lost her voice.
Great. Thank you, Rachel. Sorry. So I'll just read this out. If RLUPs are a product or device of government, as they currently are, we can't surely intervene in a market or be perceived to be doing so by seeking to broker agreements if we RLUPs have no structural substance or integrity to do so or to hold these. Agreed, but I do think there is still a role. How do you see this manifesting? I don't see where our LUFs, the frameworks, will currently add value. How do these have any heft or power? How do communities have a stake unless government actually make these RLUPs a defined and confirmed intermediary? For example, like Community Energy Scotland was as a spin out. Yep. We can potentially become individual agents at our regional level, but surely that's perpetuating the current system and may not help with a just transition or funding new models, as will be so open to and manipulated by the influential voices, stroke landowners in the areas whereby central coordinated strategic body can at least try to support communities at a national level. So I think you've given some of the reasons here, Rachel. I think that RLUPs have a role, and there is a need for someone semi-independent, and of course we all know we're not fully independent or objective, but someone like us, at least at a partnership scale, to broker some of this stuff. The problem is that if we don't, then this happens in an uncoordinated way that is potentially bad for our local communities. Just recently, I think it was Savills, it wasn't Savills, it was Stratton Parker advertised 4 large farms in the North Pennines, all in the uplands, all up for sale. They put them all together in a single advert and targeted natural capital investors who wanted to afforest them. And that was the first that local community heard that this was going to happen. And quite rightly, they were up in arms. What can we do, if nothing else, to forearm our communities, to make people aware, to start liaising, discussing with these farmers or other landowners who might be doing this? By having engagement with these people, might we actually be able to get them a better deal? Where this is typically it's going to be a single buyer because they're looking for investments at scale. And actually by taking a joint negotiating approach, where there is some background work that shows there is a community behind this with lots of co-benefits, potentially you get a better investor, i.e. more responsible, and a better price, and this is a win-win for those landowners and for the community, and that's a role that you can potentially play. So the point is, if there is nobody playing that brokering role, then the market will do this for you. And this might be in the interests of the large landowners or whoever it is that is selling, whether it's carbon or the actual land itself, but at the expense of the local communities. And so I'd argue there is a normative argument that you need to, or at least someone needs to play that role. Now, Rachel's objection is, well, yeah, but we're not on kind of a statutory footing as organisations. And I would point you to the example of Lens. The Lens coordinators are not on any kind of statutory footing. What they have are the networks and the trust of the landowning community and the wider community in that region. And they have the connections through to the investment community. And that is what you need, I would argue. Lizzie.
Hi, that's really interesting. And I wonder if you could just, for the slower minded of us, walk through how what you've just described, the role of the RLUPs, if there had been one in place in that North Pennine situation, how could that have happened? Just to sort of really ground that idea for us.
Yeah, okay.
Does that make sense?
Yeah, so there's lots of ways that you can do this. I'll describe an approach that that I have written up in a paper that we did in the Peak District. So what we did in the Peak District was we brought together all of the key landowners with the National Park Authority, Natural England, and all of the other key stakeholders. So this is community representatives, access representatives, recreation, tourism, tenants, etc. And the question is, if as a community we want to engage in carbon markets, do we engage in potentially a race to the bottom, or potentially we are competing with each other and selling at different prices to different sellers? How about we actually create a group negotiation strategy for future sellers and can offer them something at scale, at the scale of the Peak District, not the whole Peak District clearly, but a collection of land holdings across the Peak District at a single price that has been agreed through a process of not only looking at the carbon, but looking at all of the other co-benefits. And what we did in this process was to look at all of the co-benefits that I've mentioned, so the water quality, flood risk alleviation, and biodiversity, and the social and cultural benefits. And so the local communities, people talking about the historical value of these sites, etc. They're saying, yeah, ultimately, where there are compromises, some of these things are incalculable. These are invaluable. You cannot put a price on this. This simply has to be not up for grabs. You cannot include this in anything. In other cases, yeah, we're up for this, but this has huge value to us, and this is the kind of amount that you would need to pay for this. We did this in a variety of different sites. I think that the minimum price that we got was £66 per tonne. I'll give you the paper, I can't quite remember. But the point is that that tonne of carbon is not just a tonne of carbon, that's carbon plus a whole lot of other stuff. And so now there is a price that has been agreed with all of the stakeholders. And once you've done that, then once the contract negotiation phase comes in, then great, there is the carbon and the cut that those landowners get, and they're now not competing against each other and creating rifts in the landowning community. And there is a fund which then can go to the communities and to projects and to the things that they value. That was worth pointing out in Scotland, if you look at the land reform bill, that there is a proposal for just such a fund to be established. There is also a proposal for this as part of the Scottish Carbon Bank as well. The idea for how a fund like this would work would be, I forgot what you call it, is it a windfall tax? Not quite like that, but basically where you sell carbon over a certain amount, then it is that additional amount over and above that carbon price that goes into a community wealth fund or something similar. So it may be that there is some form of legislation that Scottish government leads the way in terms of the UK and says, you know what, in Scotland, if you want to do this, this is what's going to happen if these markets go crazy, and we are going to siphon this off and make sure there are community benefits. But if that doesn't happen, and until that happens, then it is still possible to coordinate this through what's known as what's it called? A shared values assessment. And I'll give you a link to the paper.
Thank you, that would be really helpful. Yes, working out how it applies in crofting communities in that unusual tenure situation.
Well, in crofting, the interesting thing is you have quite a lot of people who are looking for a way to tick that box of active use of the land, or whatever the jargon is. The use of carbon markets and an income from carbon markets, even at a low level, may be a way of demonstrating, yeah, we're farming this land for carbon. Maybe worth thinking about.
Yeah, okay, thank you. Another question from Rachel.
Okay, so here is the paper with the case study in the district. No, so Lens, it was developed by 3Keel. The initial funding to develop that, the consultancy for that, was funded by Nestle, but from the outset it was funded as an open access non-proprietary scheme. And so most of the recent Lens landscapes do not have Nestle involvements. So we are talking, I probably can't name the other investors, we're talking about a co-trade between Nestle and a bunch of other co-investors in the south of Scotland. But any Lens that we might do in Speyside, that would be Diageo plus multiple other investors, for example, in that kind of Lens. In the Indonesian Lens that we're looking at is a cooperative and a set of corporates interested in oil palm plus a paper mill that are the investors. Yeah, I'll give you the link to Lens. So this is not, it is linked in a lot of people's minds to Nestle because of their early involvement, but this is not a Nestle initiative. Okay, that's past. A few people had to go, and I should probably get some lunch before my 1 o'clock. So I'm going to suggest that we close things there. Hopefully this has been useful. Yay, great.
Yes,
thank you, Hannah, for your
information.
help.
Thank you very much.
Thanks, Lizzie, for the great questions. You know how to get in touch if you've got any other follow-ups. Okay, it's been a pleasure.
Okay, thank you.